Hi everyone, Anthony here from Investing in the Real World. Today we're going to be talking about cap rates, right? And we're going to be going over 1, what is it? 2, how to calculate it, and 3, how is it used in the investment world? Number 1, what is a cap rate? A capitalization rate, or short cap rate, is basically the rate of return if you bought a building cash. That's the basic way, easiest way to understand it. Okay, so no loan, no debt. You bought $1 million property cash, and it nets every single year annually $60,000 per year. So your cap rate is a 6. Number 2, how to calculate it. So the way you calculate a cap rate is, remember, it has no debt service, doesn't take into account a loan. So you take the revenue, which is the revenue for the year, minus the expenses, which gives you the net operating income, and then you divide that by the price. So real simple. Calculator here, follow me. You don't need a calculator if you could do this in your head, but you take 100,000 annual revenue minus 40,000 expenses equals 60,000. Now you know that the price of the property is $1 million, so 60,000 divided by 1 million, and you get 0.06. So you have a 6 cap rate. So if you bought that $1 million property as is, with the rent and income and expenses as they are, you just bought a 6 cap. That is how you calculate it. Number 3, how is it used in the real world? So a cap rate, the way it's used in the real world is if you're comparing two properties, so you have an 8-unit apartment building and a 10-unit apartment building, and they're in the same neighborhood. If this one is selling for a 4.5 cap, well then the market comp is, if this one is similar in the same neighborhood, in the same market, similar property, should be around a 4.5 cap. So that's how you can kind of judge if you're comparing apples to apples in the same area, how it's used. Another way it's used is if you buy a building and say it's a lower cap rate, it's like a 4. You're like, well, that's not a good return. But you know that if you get market rents, the cap rate should be a 5 or a 6. So that spread, the difference between current cap rate, what it is now, and what the market rents and what it should be, the spread helps you evaluate the deal. So you're like, oh, this cap rate is a current cap rate, and this is the pro forma cap rate. The difference is how much potential I have, the value add potential. Okay, that's how it's used in the real world. Okay, so now you know what a cap rate is, how to calculate it, and how it's used in the real world. Well, how do you apply it to what you're trying to do in investing in real estate? Well, if you're looking at a duplex and you're looking at a triplex and a 4-unit, you could only put your money in 1 or 2 places. By figuring out a cap rate, you can compare each property and what your rate of return is. So then you say, oh, this property that I'm buying has a better cap rate currently than this one. And that's how you can compare in your area. Now, what's a good deal in your neighborhood may be not a good deal in another area. For instance, in Los Angeles, things could be pretty expensive. So getting something here that's a 4.5 cap in this current market is a good deal. 4.5 cap could be a good deal. That same property in Austin, Texas might be a 6.5 cap or a 5.5 cap. So it could have a better return in a different market because cap rates are market specific. How are you guys calculating your rates of return? Are you using the cash on cash return? Are you figuring total return, which is the equity on top of the investment and the cash flows? Are you looking at internal rate of return? Or do you just have your own really basic formula? It doesn't have to be complicated. That's the beautiful thing. One of my biggest clients, I said, well, how do you determine what you're going to buy? He said, if I think it's a good deal, less than what everything else is priced, I buy it. So it sounds really funny, but that was his model, and the guy owns thousands of units. So really simple. But which ways do you guys calculate your returns? And basic napkin math that helps you in your investment decisions, huh? Again, my name's Anthony. My information is below. Make sure to subscribe, share, reach out to me if you have some investment goals, and my team and I would look forward to helping you out. Thanks again for watching. Talk to you soon.